But let's focus in on some of the macroeconomic indicators. It's a very heavy week in terms of data next week, as well as the outcome of the ECB on our own markets. Madan Sabnavis, Chief Economist at Care Ratings, now joins in on the show. Madan, to begin with, it seems that the European markets certainly have priced in a bond buyback announcement by the ECB today. That would certainly help the peripheral economies. But what if they don't deliver? What should we expect then, and what kind of a rub-off will that have for the Indian economy?
I think it's very critical as far as the countries are concerned, and the ECB continues to support them. And because there's a whole question of trust which is there between countries, between banks within their financial system. So therefore, I think this is something which is more or less inevitable. And I think what the ECB also would be looking at would be what's going to happen in the US. In the US, we are talking in terms of a QE3. So overall, if we see the global economy is really looking, or at least in the developed countries, is that we need to have more liquidity in the system so that you're able to reignite the economies. Now, that will be a very positive step for the rest of the world, especially for the emerging markets, because once you have more liquidity in the system, there will be a tendency for more foreign funds to flow into the emerging markets, but that's where the growth prospects still lie, notwithstanding the fact that there has been a slowdown in emerging markets too. So from our own point of view, I think we've seen a good deal of FII funds coming into our economy. So I should think that there would be some kind of a spill-off effects in a positive sense as far as we are concerned in terms of these funds. And plus the fact that any kind of a revival in the Euro economies as well as the US economy would also provide a kind of a boost to our exports. Now, we can't really overstate it saying it's going to change the way in which the Indian economy is behaving, but definitely the kind of negative tendencies which we have seen on the trade front could probably move more in the positive direction.
So Madan, it's quite likely that the ECB may do something today, and again next week that the Fed may do a QE3. Now, while it is positive for EMs like us, where we can expect to see larger fund inflows, FII fund inflows, and the impact of that on the rupee, wouldn't you say overall it's a bigger negative for us because of asset price inflation for a country like ours, which imports more than 70% of oil? The impact of QE3 on crude oil. Overall, wouldn't you agree it's more negative than positive for us?
No, actually, I would tend to think it would be more positive because, there are certain negative tendencies which would come in terms of our imports. But on the whole, I'm not quite sure how the exchange rate is going to behave finally. Are we really going to see the dollar strengthening vis-a-vis the euro? Because we are thinking of looking at a situation in which both the ECB and the Federal Reserve are looking at similar kind of measures. Now, if we're talking of a situation where only the Federal Reserve goes ahead with QE3 and the ECB doesn't do anything, the dollar is going to weaken, in which case it would be beneficial for us. But let's assume that this kind of thing, both the central banks are going to take similar remedial measures, in which case I think the situation will be more or less neutral. But definitely more liquidity in the world economy moving towards a kind of revival will mean that commodity prices will start moving upwards. So there will definitely be a case of imported inflation coming into the country. But in terms of the flow of funds, which I think is probably more critical for us today, I think that will be a very positive factor. So inflation already is at a level of around 7%, and I think we're sort of used to a number of 7%. So maybe moving to something like 7.5%, 8% will not really be radically different. But getting in more foreign funds will definitely help to address the issue of current account deficit.
So all right then. So when you have large supply side factors, beginning to work on inflation, which is already high in a country like ours, doesn't that make the task of the Reserve Bank of India that much more challenging, because you've got seriously high inflation at the same time growth is floundering?
Yeah, that's true, because if you look at inflation today, we're seeing that two parts of the inflation are something which is beyond the RBI's control, food inflation and fuel inflation. Yet they have taken a monetary stance of trying to keep the interest rates in check until such point of time that inflation rate comes down. Now we'll be talking of the core inflation number moving up. So we'll see the manufactured prices now moving up. So on the whole, I think while inflation will tend to move, say, in the upward direction, but it would still be above the 7% level which we are talking of. So the RBI will probably have an easier choice of not having to do anything because inflation is still high, and they can stick to the position of saying that inflation is high, it's probably increasing on account of global factors, as well as probably because of the drought impact or whatever kind of an impact we have during the Kharif time, pushing up food prices, inflationary expectations. So I think the task becomes slightly easier for the RBI in a very negative, positive sense, because inflation will still be high. There won't be any kind of debate to say that will prices be coming down soon or not.
But then some of the apprehensions over the agricultural output and water shortage, they have receded now with the rainfall having improved. But highlight for us how much precedence we should pay to the overall monsoon factor on the Indian economy.
The monsoon is very critical, because I think today we shouldn't get carried away by the fact that there's been a revival in the monsoon. Sure, the Kharif numbers on the whole may look better than what we had expected, so that would be a lot of relief. But specifically, if we see the breakdown of the more granular nature of which are the crops that are going to be affected and where there could be certain kind of hardships, we are still seeing in coarse cereals, we're seeing in pulses, to a certain extent in oilseeds, groundnut in particular. The soybean has done very well. So numerically, the number would be probably nothing to be scared of, but I think there would be certain issues in terms of how the government addresses the problems of shortages in specific products.
There's also a lot of question when it comes to to how much we should rely on the crucial IIP numbers which are slated to come out next week. What's your expectation, and do you think that the RBI will really hinge on that number when it comes to monetary policy decisions?
Yeah, they will definitely have to take. I think that's the only number which we have. See, we only look at the PMI, we look at the IIP numbers. Now, we know very well that the PMI is a different concept than the IIP, the two of them not really related. IIP is susceptible to major changes which have taken place in the form of revisions, but I think that's the best which we have. And if we move away from the fact that whether it's going to be whether it's 1% or a minus 1%, the fact remains that IIP is going to be at a low level. Okay, and I think the low level is what really matters. I think whether it's a negative, it psychologically puts you back. Whether it's 1%, 0.5%, 0.2%, to my mind, it's low growth. There's little solace to be had in case we say finally end up at a number of 1.2, 1.3, because we have been in the phase of around 8 to 10% industrial growth. We've come down to a level of less than 2%. So to my mind, I think as far as the RBI is concerned, they will work on the assumption that growth is low. It's probably not going to recover significantly in the next couple of months. It is until the so-called busy season begins. And work on the assumption that growth is where it was. Inflation is still an issue. And if inflation is the primary goal, carry on by doing nothing on interest rates.
And also, if you could highlight, the fact that we had the GDP reading coming in at 5.5%, but still a lot of foreign brokerages are going ahead and lowering their estimates for their overall GDP. How worried should we be by this?
So see, growth in GDP is something which is going to be lower than what it was last year. I think we had 6.5%. It's going to be very difficult for us to come to the 6.5% level again, which means that going by what the PMEAC spoke of 6.7% does not seem something which is something which we could hope to achieve for this particular year. So now the number of 5.5% in my mind is more heartening because it gives me a feeling that probably the growth has already bottomed out. And we could be looking at things looking better than 5.5% going ahead. But will it be significantly better to go back to the 6.5% level? Definitely not. Because we don't see any of the factors which should be bringing about the change which are in operation today in terms of policy framework, both in terms of fiscal as well as in terms of monetary policy. So I don't think, or even in demand conditions changing significantly, the export markets opening up, we don't see any of that kind of thing happening. But definitely the kind of depressing situation which we had earlier, to my mind, is something which is of the past. There's going to be a very, very gradual recovery as we sort of inch towards maybe the 6% mark, not really getting beyond that.
Right, and lastly, Madan, on a related but slightly different issue, there was signals coming out of Delhi yesterday that you will possibly see a diesel price hike post the monsoon session of Parliament. How convinced are you that we will actually see some action on that front?
No, I think they will probably do it because doing it after the monsoon session is definitely an easier way of doing it than during the monsoon session.
They're talking about something like 4 to 5 rupees a litre.
No, I think this is something which probably the only thing which the government can do, because today if you look at various macroeconomic parameters, almost everything that can go wrong has gone wrong. So we've been trying to hold on to the diesel prices, saying that it's going to affect inflation, but inflation is already high. Notwithstanding that the fact that inflation is high, RBI has been holding on to the interest rates, and that hasn't brought down inflation. And we have the fiscal deficit which is getting out of control. So while personally I would think that diesel price hike would be affecting the poorer people to a certain extent and therefore should not be gone in for, but I think practically speaking the government should be doing it because that's probably the only thing which it really has control over. And I think it will help to at least send positive signals to the international community and also the domestic community, all of us out here in this room too, that the government is capable of doing certain things. And I think this kind of thing is probably something which the government has indicated earlier also. I think when Dr. Kaushik Basu in the beginning of the year, he had mentioned saying that when we are talking of fuel subsidy of 45,000 crores, the logical thing is that we covered the price increase to a certain extent, and beyond that point of time, everybody takes a part of it and takes on the burden. So I think this would be a very prudent move, and I think it will probably go through. I'm not sure if it will be 5 rupees or maybe half a rupee or 1 rupee, but definitely we could see some kind of revisions out there.
All right, Madan Sabnavis, thanks very much for joining us on the show with your take on the outlook for the Indian economy. With that, we've run completely out of time. From Avan, me, the rest of the team that put this show together, thanks very much for watching.